thank you very much for joining here, and welcome to our Synder quarterly roundup webinar. Today we're going to talk about automation best practices and product insights and some exclusive perks that you guys will get as a participants of the webinar. My name is Polly. I'm a product manager at Synder, and Dasha is here with me today. She's our leading onboarding specialist, and together we will be exploring Synder insights today. There are people here who already use Synder and who know perfectly what that is. There are people who maybe have heard about it several times and decided to finally step in and kind of see what is it all about. And there are people who really hear about it for the first time. So to make sure we're all on the same page, let us explain what Synder is. So Synder is an application that connects online payment processors, e-commerce sales channels with the books to automate the bookkeeping flows. So on the one hand side, we support e-commerce platforms like Shopify and Amazon and Wix and eBay, payment processors like Stripe, PayPal, Square, Authorize, etc. Some POS systems, so there are 25 plus different integrations. So we'll send you the link in the follow-up email, so you'll be able to see them, all of them. And on the other hand side, there are accounting platforms like QuickBooks, online or desktop, or there are like Xero and our own accounting. So today we're going to be focusing mostly on QuickBooks Online. So that's what Synder is. With this said, today we're going to talk about the modes of the synchronization, or the ways of doing books that Synder supports. Also, we're going to talk about several use cases, basically about the ways to customize the data entry to QuickBooks, making sure there is a correct P&L for your client, correct balance sheet for your client, that the COGS and assets are tracked properly if that's what your client needs, multi-currency use case. So different pieces of the automations, and yeah, the cool thing about them that they all were developed based on the feedback from accountants. So probably some of you guys here can already will be able to see the features that you've requested, and you go okay, yeah, I remember that. I discussed this with these guys. So yeah, they're doing what they're promising. So getting closer to the point, there are a few ways to do books, right? You all know this. So you can either do it by summarized entries or by entering each and every sale transaction into the books, right? So Synder supports both of these modes. The summary mode is a daily summary at Synder, and basically this means that Synder will post one journal entry to your client's books a day. And this journal entry will contain all the results, all the sales results, for the day. The per transaction sync obviously will post just each and every transaction to the books. So every invoice, every sales receipt, the fee, refunds, so everything that that has happened throughout the day. So basically the only difference here is how you want to see the data in the books. And today we will focus mostly on the daily summary sync mode because that's comparatively new part of the functionality, and we were receiving throughout the Q1, we were receiving a lot of feedback from accounting professionals saying, okay, this is, guys, could be improved, this is missing. So we were adding the features, and today that's a roundup, so that we want to share everything that we've done so far, and we want to kind of continue moving with this. The first use case, well, as simple as that, it is about the one of your clients, theoretical one. Let's say it is the client that use Shopify and Stripe, or they can use any other systems, and they need a mapping by product. They need a online sales by online platform, and they need to differentiate taxes by states.
So say the client, they have thousands of transactions per month, and they have different online sales channels. Shopify and Stripe will be our examples, but it will be working just the same for other platforms too. And say they need to track sales by different product groups, like food, merchandise, accessories, maybe something else. They also need to track sales by each of their platforms so they can see the revenue coming, say, from Stripe, Shopify separately. And they also need to track taxes by state. So the question here is how to automatically do that without the need for manual adjustments for the P&L or something of that kind. And that's exactly what I will show you just in a second. We are moving right to Synder at this point. And yeah, in Synder, we'll be able to map it automatically pretty much just within one mapping tab here. Mapping here in Synder for journal entries, it will be more of the kind of settings part of things. We have all of those different toggles here that work again just like settings, and speaking of them, all of those toggles were also added to Synder based on the accountant's feedback that we received. So here's how we can make it work. There will be like several steps that we'll need to take at this point to make this P&L work. And firstly, we will need to enable this toggle, group sales by product, which will basically mean that Synder will just pull out all of the individual products over here to this column, and we'll be able to map them separately to different revenue accounts in QuickBooks. Synder will do some kind of the suggested mapping for sure, and you'll be able just to direct different pieces of transactions to all of those, like to one of those QuickBooks accounts that show up in the dropdown here. That's the first step. Going forward to the next one, we will also need to track taxes by states. And for that, we have another toggle, group sales by region. As soon as it's enabled, you'll see this region column that will appear. And in terms of for sales tax mapping, we'll be able again to do that this way. So we'll see, like, each state, each tax as a separate line, and we'll also be able to map them all separately this way as well. And the third step will be to enable classes to track this income by different sale channels. So as soon as we enable them, we will have another, guess what, another column for classes. So I have the class for Stripe, and I have two different classes for Shopify too. So I can just differentiate between them. And now, as we're done with the mapping, we can just go to Summaries tab. I'll just show you how the result actually looks in QuickBooks. I'll just show it on the example of one of the Shopify summaries, say for this date. If we just open it in Synder, we will already see some kind of the short preview of how it will look in QuickBooks. And here in Synder too, we'll be able to see what is included into the summary. So like, what are the individual transactions in it? And now we can just click see in QuickBooks to see how this journal entry actually looks there. And this journal entry will like pretty much contain all the accounts that we mapped on the previous step. So we will see, first of all of the like different accounts over here. So we'll see the revenue split into those different accounts as per the mapping. We'll see the taxes map into fees. If you have something else, like again, discounts, shipping, it's also showing up over here, cost of goods sold. And we'll also get back to this point just in a couple of minutes. So yeah, that's what we'll have for this kind of detailed part of the mapping. As for how it will look in the profit and loss report, let me also show you firstly this part of the P&L without any classes. And now I'll run the report by classes additionally. And you see how quick and easy you can just track all of those different revenue amounts and see how much is one Shopify store making, the second one, Stripe, or any other platforms. Same way you can also see the fees, refunds, and all of the other things, shipping, so everything. Okay, let me know also if there may be any questions regarding this particular use case.
Don is asking, can you show the classes? But I guess this is what you showed in QuickBooks. Just Don, can you let us know whether you want to see classes like in the way they're set up in Synder or just the results in QuickBooks? We're ready to. Oh, it's good. Cool. Okay, so yeah, we're good to move on.
Okay, great. All right, then as for the next use case, we will be talking about more of the kind of in-depth side of things, but we know that a lot of people face this situation and they have the question on how to manage this properly. So back to slides. The use case number 2, say that you have the client who sells like maybe internationally or across like overall just even different, like, I don't know, countries. So let's say, they sell across US, Canada, Great Britain in my example, which obviously results in multi-currency transactions and multi-currency setup. And say we need to map all of those currencies, all of those transactions properly, especially if they're staying in their original currency. So they receive payments in USD, they pay out in USD, same way they do with Canada. So there are like those kind of separate flows for each of the currency, and they need to track it accordingly in QuickBooks, and they need to account for it, what's the most important, and reconcile it all as well, like automatically, ideally. And that's also what Synder will do for you. Going back to Synder at this point to show you this part as well. In Synder, first of all, you will have the option to enable multi-currency here under My Account. As soon as it's enabled, Synder will give you the option to map those currencies separately. So over here, you'll have the option to to add new currency to the mapping if needed, just to show you how it will look over here. And once, say, you added this new currency, like I have the USD mapping over here, and I have like quite some other things too, and I have the Euro currency mapped separately too. So this way you will be able to map all of those transactions in different currencies separately and track them all in their original currencies in QuickBooks too. Okay, let me know if there are any questions regarding the multi-currency use case too.
There was one question regarding the flow where there is a conversion. So how is this one is going to work? Like
as for this one, actually it will be even simpler than this one, because here obviously we'll need to do this mapping for separate currency. But as for the conversion rate, say same situation, but all of the payouts are converted into US dollars. I'll just be back to Synder in a second to show you this. Let's say we have like this transaction. I do have like quite some currencies there. And we will be able just to convert them all to the home currency. So just to show you.
It's as simple as if there is a conversion on the side of the payment processor, Synder will be able to take the conversion rate from there and replicate the same flow here and convert everything to one single currency. So for example, just US dollars, if that's a US client just who sells abroad. But if there's no conversion and every currency is just paid out to different bank accounts in different currencies, you can also map this. And there's also another question from Rick, and he's asking, does QBO multi-currency needs to be switched on? If that's a case where Synder does copies the kind of conversion rates from the payment processors, then no. So you'll be just receiving one journal entry in your home currency, so you don't have to even enable QuickBooks multi-currency. If, for example, there's the other situation when your client has several bank accounts in different currencies, and they really have the actual banks are in different currencies. So then yes, so probably that's the way you kind of reconcile the books, right? So it should, usually it's already enabled on the QuickBooks side. But yeah, if there's just one bank account in, for example, USD, no need to even enable multi-currency. Synder will be able to do all the conversion things on its side. Okay, are we good to go? No more questions? Perfect. Just wanted to make everyone happy and say that Lindsay received at least we've sent the gift cards. So usually Amazon has like a few minutes delay, or a few sometimes it's even a few hours delay. But hopefully, Lindsay, if you receive it during the webinar, just let us know, so we can all feel a bit of a joy. Okay, so we're good to move on.
Use case number 3, cost of goods sold. Let's say that you have the client with multiple products. Let's say in Shopify, any other platform works the same. And obviously they have a lot of different costs, unique ones for their different products. And obviously they need to track all their cost of goods sold calculations in the books. So the question here is how to automate this whole flow with Synder, how to make sure that Synder is set up in such a way that it will be tracking all of the cost of goods sold calculations automatically. And going back to Synder to show you where to enable this magic feature as well under My Account, we do have this small toggles enable cost of goods sold for each connected platform. So depending on the platform for which you need those calculations, you enable this toggle. That's first step. The second step will be to go to mapping and make sure that cost of goods sold is mapped there. So Synder can actually account for those amounts under the right cost of goods sold account. I'll just show it, on the example of Shopify. So here it is, all mapped, all good. And the third step will be to open the products and services tab. You'll see this tab will appear like some kind of the new one after you enable this feature. And here, yeah, you will see all of the products that Synder pulled out so far from the connected platforms, Shopify, Stripe in my case. From some channels, Synder pulls out the product cost automatically. So pretty much we'll just calculate the cost of goods sold amount based on the number of units that are sold in this or that order, and like based on the cost as well. So Synder will just do those calculations on the back end. And just as I showed you in the first journal entry, you'll see this amount in the journal entry, and you'll see it in the profit and loss report too. If, say, you see that the cost is zeroed out, you can also import the Excel file right into Synder, so it will just help you to update all of those product costs in bulk. And again, the same way as it's in the first use case, Synder will be just calculating those costs automatically itself for you. Let me know if there are any questions.
Yeah, there was a question about what do we mean by COGS mapping. So as Dasha just showed, and you may get back to the mapping side, is just the way you tell Synder that that's my cost of goods sold account and that's the assets account I need to, like, that's the cost of goods that I need to increase, and the assets account I need to decrease. So that's it. Another question about the costs. Will the costs get updated as the purchases are made? Not in automatic mode for now. So right now you upload the costs and Synder will use those costs to calculate the COGS based on, like, you've sold 5 apples. We know that in Synder the cost for the apple is $5, so you get $25 cost of goods sold. And another question about, that's a vivid topic, I can see. Another question about so the invoice has to be input as at sale point like that. Not really sure what is the question about, but the thing is that if you're using like a daily summary mode, versus the per transaction sync mode, but that's then you can just upload the file with the costs that are correct as of a specific date, and then you can import the data and push them to the books. So that's how it's going to work. Alrighty, so yeah, so Don elaborates on his question about inputting invoice as POS, then item are being sold or listed, then purchased back to QB. So that's a good one. I need to reread one. So basically the flow of the daily summary synchronization is a bit different from the per transaction sync way. So once Synder syncs an invoice to the books, so that means that you're using the per transaction sync. And then whatever is the cost for this specific product, which is inside of the invoice, whatever is the cost in QuickBooks, so this one will be used to calculate COGS. If that's a daily summary, you have to import a file. So it works differently depending on the sync mode. So I hope this answers the question. Okay. And there was a question about the menu bar visibility. So it looks a bit different. Yeah, it looks just a bit different based on the per transaction sync or the daily summary sync. Yeah, so that's the trick. Okay, are we good to go? I guess so. Alrighty. So I think we're good to move on.
Okay. All right, so then, yeah, use case number 4, where we're talking like quite some about Shopify and most like e-commerce situation. If we don't take the very first case with the mapping into considerations, for sure, like applicable for everyone. So now we'll dive into like SaaS client side of things a little bit. We'll talk about Stripe and PayPal use cases a little bit as well. So yeah, use case number 4. So you have the SaaS client with Stripe loans. And the question is, again, to account for them correctly and ideally automatically. This loan, it's something that is taking like from Stripe. So client takes it from Stripe. And then when when every sales happens, say in Stripe itself deducts small percentage of the loan from that every sales transaction. And it's really a pain that's happens every day. So the solution here will be just to map those loans to the Stripe Capital Loan account. It's also, yeah, part of the mapping, as you already see. And yeah, as simple as that, you just map this line again to the needed account, Stripe Loan usually, and yeah, the rest will just gonna work itself automatically, so it will just constantly decrease the amount of this capital loan. And let me know if there are any questions on this point too. Okay.
No questions on Stripe loans. More questions about COGS. But I think, Don, we will be able to schedule the call with you to actually go ahead and discuss the COGS thing. Yeah, Stripe does loans money. So yeah, and that's the thing we faced like after the COVID, I guess. Like Stripe started doing this, and yeah, now it's possible. So any time in the future you may face a customer like this. If they use Stripe, they may take a loan. And the tricky thing about it, as Dasha mentioned, the tricky thing about it is that yeah, it will be like each Stripe sale will be reduced by very small amount of loan payback. So that's a pain in the neck to really account for this, but not if you use Synder. If you're using Synder, it's fine. Yeah, so we're good to move on, I guess.
Okay. And yeah, the last but not the least use case I have to tell you today is the use case number 5 for PayPal users mostly. Say, again, you have the client using PayPal as the bank, so they might have both kind of transfers to PayPal and transfers to the banks, like different transactions by amounts. I mean, like they can be positive or negative amounts. And this also might be a question of like, how to manage this whole situation, and more like clear use cases where the client have, say, the balance in PayPal for $300 and they need to make a refund for $600. So they need to take that money to complete the refund from card or something. So there is, in other words, just a transfer from this PayPal balance, and you need to map those amounts correspondingly to needed accounts, so we could just account for that accurately. And the solution again is here to mapping, just to map all of those amounts separately, and this will make it quite easy to track income, expenses, and reconcile them against the correct bank account.
It was our pleasure to host this webinar for you. We'll try to do similar stuff, quarter by quarter, so that you know exactly which things we're working on right now.